Okay, everybody, good morning. Happy Wednesday. I have a few charts to share today, but I'm not going to, you know, give a lecture or long explanation as I sometimes do to start the videos. So, curious to hear what you guys think is going to happen as we move into the end of this year. Not only with the Bitcoin price, but with Wall Street, and obviously there's a lot of hype right now going on in Las Vegas with the Bitcoin North American Bitcoin conference. So let's take a look at some things here. This is a very simple chart. You guys know I like to focus on the power trend. Here we just have the price and the trailing 12-month returns. Okay. When returns go negative, they don't show. You can see them on the tooltip, but not the actual cursor. All right. And when they're positive, they're this green line. This chart is maxed at 2,000%. Okay. So obviously, when we were coming from under a penny over a dollar, we'd have some pretty astronomical trailing 12-month returns for Bitcoin. If you got in June 2010, you saw a 200,000% return in June 2011. Already by July 2012, it'd be down 33% though, okay, from that $30 top. And on we go. But obviously the pattern is crazy returns on a trailing 12-month basis in 2013. Still, 4,000, 5,000, 6,000%. Still a couple days with crazy returns in 2017. That is a trailing 12-month simple return, 2,000%. So if you looked at Bitcoin when it was around 800, 900 bucks at the end of 2016, by the end of 2017, that represented a 2,000% return. But then we see from 2021, obviously the peak is quite a bit lower. Still high, still amazing for many, for anybody really, no matter where you are in the world. If you could pick up 1,000% return. Now, of course, you got to time that to get exactly that return. Very few people can do that. Even getting 80% of the gains can be difficult. But for a while, let's say in the double top as well, right, going into October 2021, Bitcoin was offering 300, 400% returns per year. If you throughout that year, basically, roughly. And of course, down we go again. FTX debacle. Bitcoin loses 2/3 of its value, even over 70%. November 2022. I think this was the day that FTX imploded. And now we've been trending upwards again. Good morning, Roman. Good morning, Sandro. I like this one. What do you do, sir? What's the job description? I'd be curious. I want to just talk a little bit about some returns again. Obviously, we're going into this hype cycle. Saw the news about Steak and Shake. They say that using Bitcoin is 50% more cost effective. That's amazing. Especially to hear for people like myself who I don't really focus on that too much, as you know, and more of a long-term hodl on-chain guy. But obviously the Lightning Network is incredible. And if you can, throw a couple bucks there, a couple sats there, and play around with it, whether you host your own node or not. It's a wonderful technology compared to anything in the legacy TradFi system. We're going to talk with Anthony Scaramucci next week. I'm a big fan of his, both politically, kind of the evolution that he's taken since he's been in the Trump admin in the first term, but also obviously being a established traditional Wall Street guy who has gotten into Bitcoin in the last 10 years and certainly believes in it. I love that. You're the boss and making bicycle accessories. Very interesting. Got to get my daughter a bike. It's time. I mean, she's got the kiddie bikes, but I got to, graduate her to one with training wheels. Obviously, we could do fancy math techniques here. You could take a mean of the tops during the year 2013. I don't know what it would be. A couple 1,000%. And then the mean of the tops in 2017. Maybe 800%. And then here, all through 2021, maybe it would be 400% or 300%. Obviously, it's, I don't know if it's falling by a consistent factor, but this, sometimes it helps to just look at things in a very, very simple way. I like this. For sure, I like this. We've trended, consistently up at 100% per year. Of course, we had this dip during the Liberation Day period, which I am sure many established institutions were trading, but we're poised to go higher. No, not derailing anything. The newer, lighter kids' bikes by the likes of Woom and Early Rider are fantastic. And skip the training wheels. Okay. I mean, when I said a kiddie bike, she's on one of these bikes where you can basically put your feet on the ground and roll around. We can try. It would be, I'm sure she could do it if you just, repetition is the mother of all learning, right? What age can you get kids biking if they're not using training wheels? I'm curious. Like at all. So we have the old power trend here. Again, we are moving above it. Some great days here. I'm going to show a couple different valuation metrics today. Running at a 50, 60% TTM, all right, compared to a year ago. So fantastic. And back above the power trend. Okay, so remember, the very important thing about this beautiful power trend is each day that we're above it, we're looking better for the future of Bitcoin. Because no matter if we have a huge boom and then again a pullback, or World Liberty Financial gets indicted, or whatever happens when the Democrats come in, if the Democrats come in 2 years, I'm not saying that would be a good thing. I'm just saying it could happen. The longer that we spend in these times above the power curve, it's better for the long-term trajectory of Bitcoin adoption. It's like the Lindy effect, right? the longer you can stay above this line, the more you pull this line up. Nice. 2.5. Well, we can work with that. Hello, Andrew. No worries. Just as I said, no lecture today. Just kind of going through some price charts and curious what you guys think about how high the trailing 12-month return could be for Bitcoin. We had it 1,000% briefly in spring of 2021. Went down, went back up for that double top. Of course, it was a higher base, so the trailing 12-month was lower, 400, 500% very briefly, really 300, 400%. But I'm curious if we do get this spike, as we've talked about on the channel, some people think maybe it'll be more relaxed. I tend to not think that. Markets always throw a wrench in our plans, but usually markets extend. Usually that pendulum doesn't swing and stop. Usually it swings and goes, overextends. If we think about these numbers, though, and put actual prices on it, a 100% gain is a double. 200% gain is a triple. 300% gain, it seems like it's a triple, but it's a quadruple. All right. So if we're going to something like here, in fall September 2023 at 25,000, a 300% gain only takes us to today's valuations. So it's an interesting question. Of course, if you take a 300% gain on the end of the year, then that takes us to 400,000. So where we hit that sweet spot will be interesting, and I think it'll be another peak like this. I don't think it's going to be 1,000%, but it could be 300, 400% on 100K, right? Which was the price of Bitcoin at the end of last year. So simple things to think about. And then again, this is the right-hand axis. Now we can smooth out these numbers. And it looks like the inverse of the power curve. Obviously, still amazing returns, even though we're looking at a couple 100 or 1,000% returns, 200,000% returns again in June 2011. If you smooth it out and just take the return of the trend line itself, that is the solid black line, you get this figure. All right. So unfortunately, again, I probably sound like a broken record for those of you that have been hanging around in recent days, but I don't see hyper Bitcoinization coming out of this curve. I see standard power curve adoption, and we're at about 43%, 44% year on year. And this line, this trailing 12-month simple return won't hit stock market numbers. It won't hit 10% until 2070. So I don't know. Throw it out. If you think 500% year on year on 100K, that's 6x. It's always one more than you think. Remember, 100% is a double. 200% is a triple. Good morning, DAT or DAT. No, I wouldn't say buying at the top leads to future gains. I mean, if you hold long enough, you'll always be in profit. So anybody who's bought Bitcoin at any point, let's just ignore this, is in profit. Only exceptions would be, did we hit, where was the 107? Maybe 1 or 2 days here back in January. Yeah, I guess here, December. But really at the $108,000, $109,000 prices, everybody's in profit. So that's a great thing. Where, when you hit close to all-time highs, everybody's in profit. But no, your return would be less if you buy the tops. For that one, which is a slightly different, it's a slightly different chart, which I can pull up. So this is a very simple trailing 12-month, and it's actually not the chart that I prefer. I prefer talking about Bitcoin and talking about, truly hodling. I prefer this chart. Whoops. Okay, I think you can see that. So I prefer this one. If we go log scale left, all right, same type of deal. And now what this shows is, let me get one from Andrew here. My base case, going back to the bottom of the bear, was a top around the ballpark, 175K. Yeah, 200%. The price of Q3 2024 might end up in Q3 2025. Yeah, I think that's conservative. I personally think that's pretty conservative. But it's also possible because we have probably had most Wall Street exposure. I mean, we certainly have had more Wall Street exposure than ever. And with that comes more speculation on the other side, people trying to short all of these massive daily highs, which I'm going to talk about in a second. So it's totally plausible, I think, your case here. Yeah. Yeah, and I remember even in the earlier bubbles, like 2017, that was the first bubble I really participated in. I was there in 2013, but I was watching more than buying because it took me a long time to, I was watching a lot here, unfortunately. This bubble scared me a lot when it went up to 100, 200 actually, then came down. So everybody's got the price they deserve, as they say. But anyway, I would love to see the power trend stand up. It makes much more sense. But like the ball in golf, the price will tell us all we need to know. Yeah, 100%, 100%. But just to get back to your question, that you see that if you bought the tops, this is like the full picture. This will give you it will account for your time dilation, meaning how long you've held Bitcoin on any time period until today. Okay, so if you did happen to buy, so just take off the curves, because this is kind of like a longer term version of this chart. This is very simple, trailing 12 months, right? But this one I like more for a long-term perspective. And so as you see, I know my tooltip always gets in the way. I can't catch it sometimes. But if you bought the top here in 2013, in 2013, the first top or the second top, you see that this green line is lower. All right, so obviously you're still way in profit. But if you bought, at 1,000 compared to 100, your return falls. And so what this green line tells you is if you held until today. All right, so if you bought the top in December, or, it's not even the top really, somewhere. It's really, I think it was November. Where is whatever, I'll zoom in. If you bought here, November 2013, you have a low here on the green line, you'd still get a 48% return holding all the way until the valuation today, which is enormous. That's 48% over 12 years. It's enormous. It's an enormous return. Because of the power of compounding, that's what $1,000 investment in Bitcoin looks like, 12 years ago. And Peter Schiff was telling everybody to get away. Yeah, he was right in the short term. But over the long term, holding $1,000, compounding into 100,000, that represents a 50% return year on year on year on year. So it's enormous. And you can just see, you know, bonds take into account like coupon payments, and they make it more complicated, but it's the same principle when you hear about yield to maturity or IRR. But here it's obviously very simple because there's no coupon payments. It's just hodl, buy and hold. And you can see it's an enormous gain. I mean, it's a $99,000 gain. So I'm rounding, obviously. It's $99,000. Sorry, $109,000 gain, roughly, if you bought at 1,000 or under 1,000 until today. But what that means, what's that translated into finance speak and Bloomberg speak and CNBC speak is 50% per year. And as you can see, no one's getting the returns that, the early guys were getting. But again, this is, in my opinion, is more proof of the power trend being a legitimate description of what Bitcoin is doing, because you can see it's just got that beautiful, if you smooth this out, you get this. And then again, I think I've said this, but the reason it looks kind of wacky here is because like this will eventually settle down. It just takes time. So probably the height of these Bs here, which are way up, like, look at it, the actual 130% per year compounded if you bought at 26,000. Remember when Peter Zion was saying it was undervalued? Or no, that was actually here, 2022. Here. He was calling a $16,000 Bitcoin $17,000 over its value. Obviously, he was way wrong. If you took the opposite side of that trade, you got 113% per year compounded, 110% per year compounded. But those will settle down as time stretches out, as Bitcoin goes into the future. If you looked back, like this is a dynamic chart in the past. So every day that goes by, these green bars update a little bit, but they settle into a long-term number depending on where you bought it. The point is, you're sort of ahead of schedule, basically. Here, these look really huge, and it was you were buying deeply discounted Bitcoin at 17,000 in 2022 if you were doing it. So that's why these green bars look really, really high. And then they can even go off the chart here. I maxed this at 200 as well, right? I think. Yeah, 260%, 250%. Even if you bought in March at 84,000 with such a jump to June, that's a 271 annualized or compound annual return. That's just the run rate that the formula will calculate. So it gets kind of wacky. The point is it gets wacky the closer you go till today. It could be wacky to the upside or to the downside. Right now it's wacky to the upside. But the long-term trend is this dotted line. And that's the really awesome, beautiful, dare I say, predictable thing about Bitcoin. Yeah, I think it could be. But I've said it a lot. The markets throw us for a loop every time. I really did not think this was a top, because it seemed like a double top, and double tops aren't supposed to happen, right? So, but it was. And a lot of the metrics, if you looked, actually were stronger in the spring top. Now we're already 4 years beyond that, and we're still catching up to the trend, which is here. Because if you look at, let's take this out. If you look at 2021, even by November of 2020, and it's true, this black line was not exactly the same back in 2020, but it was close to what I'm drawing here now. Because again, every day's data pulls it around. But even, let's just say by January 2021, we were well over the trend with COVID and meme stock trading. This would translate into January of this year. So if you think back in January of this year, we're not even at trend, or sort of barely at trend. but we fell back down. So it's a little bit different, slower progress this year. 2021, we're like well above trend, and now we're not. Just now getting back above. Yeah. No, I mean, it's the same. Like, I'm always trying to think about it from an investment perspective, but it was just so wacky. You had to send your money to Japan. And it's not entirely true. Obviously, you could have used local Bitcoins and bought with cash or something. But there were so many stories like you would read. First time I even heard about it was here, early days. And I remember, if you looked at, and you can't see it here, but I still have the article saved. I got to dig it up. I could show you guys. But the first empty Gok scene was here. Was the 10th of June. 2011 is the first indication that there's something wrong with the exchanges, and Karpelis didn't have everything under control. And there was an intraday drop of like down to pennies. It eventually went back up, but it was the first big external shock due to an exchange, an insecure exchange. It was right here. I remember that to this day, and I was like, I couldn't be bothered, because I probably heard about it even here on like some podcast. I can't remember. In fact, I do remember. It was a Stefan Molyneux interview with Robert Wagner. And, it was $5-6. This is exactly when the Winklevi heard about it, by the way. And a lot of the old guys, Eric Voorhees, Roger Ver was earlier, somewhere around $1. Roger Ver was somewhere around here. But I was just, reading and, trying to figure it out. But I wasn't a fundamental technologist sort of a guy. So I didn't experiment with the client. And then as the price goes down, you lose interest. You think that's a fad. That was already there. And then here it comes back up above 100, and you're like, what? And 1,300, and then, yeah. So having the belief during this, what they called the crypto winter, was good, because I started to have conviction, even as it was going up here, because I'd seen this top. But it's, as they say, everybody, this is really, there's so many memes in Bitcoin, as you guys know, but everybody deserves, what is it? Everybody deserves their own price, or the price that they get. That's what they say. Everybody deserves the price that they get. I think that is probably a solid one. And it's like it's a vicious meme, right? I mean, nobody feels good about that when they look back at the price charts. But the good thing is we can think about everybody else that has to go through that journey as well, right? Oh, wow. Roman says he mined it, never kept that laptop. Did you actually mine a block? Because I've heard that story too. Like, some people even mined a block and then threw away the laptop. Obviously, that's a famous guy, the Brit, who's now like a Bcasher. I can't believe I don't have a name on the top of my head, but he was the guy that was running through the dump, the junkyard, the dump, the dump yard in London, trying to find his hard drive. Here, somewhere here. But I have heard of people that even got a block, and then they got 50 BTC, and then they just threw out, forgot about it, thought about it, because this was a long one. Probably would be helpful if I track, you know, the time above and the time below. I got a good comment that says, you know, we should start to put this power curve really as a support figure. And that's true. If you don't follow these guys on Twitter, Cena, Plan C, APSK, and Sminston. All of them have experimented more than I have, like with taking this power curve line and putting it more as support, and then from there seeing, you know, how the highs go. Wow. No, but I mean, that's a legendary thing, Roman. Even if you mined a block, it's I downloaded the client too, but I never kept it running and probably didn't even know how to use it. Probably didn't back it up. Whatever. But I get you. I get you. Where is it? Okay, so here's the picture. Even though, you know, we're talking about obviously this early epoch, right? These are 50 moving into 25 BTC, right? Somewhere here after this first top. So 50 coins per day. Sorry, 50 coins per block. And then it went down to 25. The first halving was 25 coins per block. If you look at the returns, like sort of the blended smoothed out is the best word to use, because obviously the returns are crazy and they can be really high or a little bit below trend, but the smoothed out return here. All right, so this is the period we're talking about. 130% per year to 73% per year. Okay, in this epoch here. Yes, we're never getting that again. Yes, that is sad to look back at that. But at the same time, I mean, I think everybody watching this stream right now should consider themselves lucky, like I do as well, because this is still enormous. 42% per year is enormous compared to gold, compared to stocks, bonds, GDP, population growth. It's an enormous representation of it's enormous return on value invested. Don't do it. Don't do it. Everybody makes, you know, it's a growing process for everybody. It's also kind of what you have time for, right? I mean, a lot of you guys, um, you know, at the office or whatever, and likewise myself. I mean, I could be every day on my node trying to figure things out and add a few more sats. Maybe I should be doing that. But it's just kind of what you want to do and what you know, what interests you. And obviously if you want to make money as well, you got to be productive, and it's hard. It's hard to be full on in Bitcoin still. Although, as we're seeing, and I'm sure if you've been following the conference in Las Vegas, I mean, plenty of people are talking about all the money that you can make in the Bitcoin ecosystem. But we got plenty of time for that. I personally think we got plenty of time for it. Yeah, we're beyond like the earliest days. We're beyond the earliest days, but there's just still plenty of room to growth. And I remember, you know, so 2017 was the crazy ICO boom, right? And that really only started like here, obviously with Ethereum kicking off ICOs. And then, they all went bust and none of them worked except for Binance, which, you know, credit to those guys. At least they did get it started and turn it into $1 billion company. U.S. government kept coming after them, but they were successful, and now they're sort of normalized, regulated. But here was silly to me. Like, yes, ICOs were silly. I guess it just depends every boom, but this boom, you were having guys like, Mr. Beast and Logan Paul and Gary Vee and these guys, like they're all just getting on the phone and shilling meme coins during this period. So there's just so much silly season wrapped around these booms to caution about. Yeah. Stupid is too harsh, Roman. It's too harsh. I know exactly what you mean. Bitcoin is stoicism. It's stoicism. Anybody, speaking of forks, anybody have any thoughts on the quantum Bitcoin fork? I've heard that going around. A lot of this quantum question has been happening ever since I've been in Bitcoin. Ever since I've been in Bitcoin, they've talked about how the cryptography of Bitcoin could be broken by quantum. And now people are trying to, upgrade the cryptography. How that will actually work out, I have no idea, but it seems like it could be a controversial fork if it ever does happen. At least the one thing that we did learn from 2017 is that a fork is the only way to show how people's competing ideas will be implemented. I'm not even saying I support that. I really wish that somehow the community could stay united. But it turns out that, the Bitcoin Cash fork was probably better in the long run for Bitcoin because, the thing was fully settled right around here. And the SegWit 2x didn't even happen. The Bcash happened back in August here, and SegWit was activated immediately after on Bitcoin. I think it was like Bitcoin Gold. There was a ton of forks here. But as long as you hodled, you had both your Bcash and your Bitcoin, and then the network just moved on. So you can't if forks ever happen, you can't trade during that day. You can't trade. You can't. Well, theoretically, you can trade because the exchange would take care of it, but you'd have to be very careful when the canonical block would be, and the exchanges would set a time. They would snapshot your balance. But if you have on-chain, you can't make a transaction. You have to just wait. If a fork is actually going to happen, like a meaningful fork. Yeah. So if anybody's confused about this, and I have no idea how developed this discussion is. I don't think it's very developed at the moment, but basically when a fork happens, it's just, it's a network. So the network would split into two is the idea, and it would happen at a certain block. And it doesn't mean that anything, like you lose money or anything. The only way that a network can split in this way is you would have, at some specific time, people that wanted to compete with the Bitcoin network would spin off their protocol, all right? But they would take it's not like they would take it, but there's basically a snapshot of all the UTXOs, all the coins at the specified block. Then the new protocol kicks in and they try to compete with the old protocol. That's exactly what happened with Bitcoin and Bitcoin Cash in August of 2017. So Bitmain was the big funder behind, and Roger Ver behind the Bitcoin Cash fork. And you see here, Bitcoin was about $4,000. And I don't think it was ever as high a price as Bitcoin. I could be wrong. Someone correct me because I just honestly can't remember anymore. But I think it was August 3rd was the day. Somewhere around $3,000 Bitcoin. And whether you had Bitcoins on the exchange or in a private wallet, in your own wallet, it would work the same. Of course, you'd have to trust the exchange. You wouldn't have to trust your own wallet. But basically, the new network, the competing network, you'd be able to act on that with your old coins. You just have a set of new coins that would match your old. So basically, one prior Bitcoin on August 2nd, let's say, I think it was August 3rd, became equal to one prior Bitcoin plus one Bcash or Bitcoin Cash, BCH. So to use the symbols, if you had one BTC on August 2nd, you would then have one BTC on August 3rd plus one BCH, which you could only interact with on the BCH protocol. So there would, you'd need new software, you'd need new everything. I mean, the wallet providers, Ledger, Trezor, they were very, accommodating to these forks back in the day. And there were many: Bitcoin Gold, Bitcoin Private, which our friends Nick Carter at Coinmetrics, they actually showed the Bitcoin Private had some, I think it was like some extra 2 million coins somewhere. Because these protocols have different rules. They're, some of them might have some hidden bugs or whatever. It's very dicey when you talk about these forks, but people do them. But as long as you're running your own node with the own rules, with your own node with your own protocol hooked up to the Bitcoin network, you'll be able to follow rules, the regular Bitcoin network's rules at any time. Yeah, I agree, Andrew. The thing that's interesting to me is, and I guess the Wall Street guys are talking about it now, Saylor and these guys. I guess I haven't really followed it, but the thing that gets me is, and again, I'm not a technologist, but the basic argument is if quantum computing can get to such a way where it can break Bitcoin encryption, then prima facie, without a doubt, it's going to break every other encryption, like your bank account, your insurance account, your retirement accounts, military protocols. We have a lot bigger problems than just Bitcoin. It does not mean, of course, that that's not a problem. That's not it's a little bit of a whataboutism. I'm not saying that that's everybody should just go away. Obviously, people think about it and are working on it, but I believe Adam Back has proposed a solution where you wouldn't even need a hard fork. You might only need a soft fork, and maybe not even that. So it's, again, I'm not a technologist. I'm not the channel to follow for exact updates on all that. Yeah, we'll see. But anyway, there's a lot of comfort, I think, in these types of charts. And then here is an update. Whoops, not this one. This one. So I showed this one a couple weeks ago. It's kind of a new Bitcoin valuation model, which shows the daily, monthly, and yearly changes in this black line in the power curve. And if you plot those changes, all right, now I'll just take the power curve off, okay? But we're talking about the change in that black line. If you plot those changes, you can get these nice, beautiful bands on the right-hand axis, okay? It says price change on the axis. You can't see it where it says a million there. It's a change in price, all right? And then if you just overlay the daily change, you get kind of a valuation metric here. And again, it's weird. It looks weird because like there's gaps because you can't do, those are days when the price went negative. There's a negative daily close from the day before. So you can't plot negatives on log scale. And anyway, it just gets in the way. So you just ignore. But the yearly kind of looked at it as an interesting little top signal, right? So as we were close in 2017, we had a few days where the daily change in price, all right, these green hashes are daily changes, were higher than the yearly trend change, which was 1,500. So the actual daily close on December 7th was $3,000, which is amazingly high. So it was pretty good to at least kiss the top. It did that only once in 2021, right? It was here. There. February 8th, 2021. The actual daily you see is $7,000. Daily change, that means we're at $39,000 on February 7th, 2021. And the trend for a yearly change of the power trend was 6,900. Now, so I was looking at this and seeing, you know, maybe where's some other zones. Clearly, when you get above a month, it's looking pretty hot, right? So we're kind of closing a few days above a monthly change. And I was talking last time, I said, well, maybe 9 months will be a good band to look at. But it's actually if you put 9 months, it's very close to the yearly on log scale. So, and anyway, I was just testing it. Something like 3 months is better. So this is actually the 3-month change in this power trend. And now, if you go back to say here, you know, certainly elevated price action is when we're moving above the 3-month. The daily change, the daily close, not the daily close, the daily change in price is higher than the 3-month trend line change in price. So it happens, you know, for a month or two here, a month or two here. It's a noisy signal, I will admit. It's not great. But if we move to 2021 now, you know, there's, as long as you hit a couple days above that, we're still in elevated territory, right? So we're still looking good here, but obviously we're not looking good now. We had a big dip. It's not like this really predicted anything, but you see that there's no daily changes that are above number 3. This one was June 9th. Let's zoom in even more. This one was June 9th. June 13th. So June 13th here was above 3 months. But obviously you see the price is way down from its high. And we have this double top. So 2021 was hard. It's hard to understand. Then we had another daily close over 3 months here in February 2022 and March 2022, but that's already on the way down. As we know, usually the year after the top is rough. So that was 2022 for Bitcoin. But anyway, let's look at now today and just see if we can understand this. Still, most of the time within the monthly range or above the month. I know it's hard to see this. Okay, I just leave it. Most of the time in the monthly range, these green hashes, or above the month. Not really above the 3-month, but certainly there's been like this one was. Oh, here, November 11th. When was elections? That was like November 4th or 3rd, wasn't it? Anyway. Right there. So this 3-month band seems like it's really going to show when things get hot. And again, just to move it out and to prepare ourselves for that, December 2025. That means $10,000 to $35,000 daily price changes in Bitcoin. perhaps could signal the crazy days. 10,000 to 35,000. Doesn't really give you much more information than that. It certainly doesn't tell you when the price is like going down, at least not in the moment. It's hard to, not like it caught this dip or anything. So, but it's something. It's something to sort of provide an indicator of how much the daily price change could be. Still, I think this is the best. If you want to just look at the broad picture, we're right in one sigma territory still at the moment. 1 sigma. If you move back to here, it was the very start of end of 2020, very start of 2021, where we went out of 1 sigma territory in 2021. So we're already 6 months ahead of, 6 months behind schedule, right? And we haven't even gotten out of 1 sigma territory. So in my opinion, nothing to worry about. Probably people wish they bought more here on this dip, and that's how it looks. Yeah. Yeah, if you think about, again, every time this is blank, so it's not blank, but blank again. It's hard to show with this tooltip, but there's a lot of days where these are negative as well. So it's huge volatility. Price could be going up 20,000 by the end of the year, to the next day falling 10,000 or 30,000. I know I have a lot of European friends here. I just want to, people don't like when I digress into politics or macro. I think macro is better than politics probably for this channel, but I'm sure you saw this. This is pretty wild. What Vladimir Putin doesn't realize, that if it weren't for me, lots of really bad things would have already happened to Russia. And I mean really bad. He's playing with fire. The fact that he is almost admitting to protecting Putin here is quite interesting for an American president. And as Garry Kasparov, I think one of the soundest, most sound minds in the space, sounds like a mixture of a plea and a confession. He doesn't mince words. On record, protecting a genocidal war criminal. Perhaps Europe's and Republicans in Congress will take the necessary action against Russia. Then I see, living in the Baltics here, here's Latvia, here's Lithuania. We have Kaliningrad, this little exclave, which really is 800-year German territory that the Russians took over after the Second World War. There was an article in Germany, in Bild, and it said that people were moving en masse from this area because they thought an invasion was happening. I haven't heard about anything like this. The comments say they haven't heard anything like this. But it certainly is one possibility if Russia chooses to open a second front. Is right in my neighborhood. So it is concerning. Yeah. It's concerning. I'm curious, though, and again, just to keep it with economics and try to not make this too political, because I know people don't like it as much here, but if you go here, is that showing up? Yeah, that's showing up. Too many windows open. This is a massive page. I could only get 50. I wanted to even show more. This is basically Europe and Canada and America, not Mexico, but sort of the NATO territories, plus a few more European countries. I mean, it's just unbelievable that this country right here is causing so many problems for us. It's $15,000 GDP per capita, and it's losing. I don't want to say losing. All right, it's a stalemate, but it cannot take over this country. But it keeps being belligerent. The president of the United States knows he's in the wrong, and he just chooses not to support this country. He wants for the guy to be his friend. It seems like it's very strange. I think the best example of how Russia could have been is if you look at Latvia. All right, it's 25K. We're the lowest in the Baltics. You look at Lithuania. This is GDP per capita, just to remind you. All right, so look at Latvia back in 1995. I don't know why I can't select it there. $2,100 per person. GDP per capita. Now it's up to 25. Lithuania, same story. It's up to 30. And then Estonia, same story. Up to 33,000. So, most of Western Europe's in the $50,000 range, but, we're catching up to Cyprus. We're ahead of Slovakia. It's obviously a, quote unquote Eastern European. Slovenia's close. I just don't know. If you really ask basic questions, why couldn't this country just focus on their own people and keep growing it? To me, that's the main question. It would be nice to be Luxembourgish or Liechtensteinian. There's some pretty high ones. Monaco, I think, is the highest in the world. Where is it? I have them here. There we go. 1995, that's $99,000 per person. That's ahead of the U.S. today. And that's $1995. Right? So this is not inflation adjusted. It's just, so that's shows you how Monaco has grown. Ireland is a little bit weird, as we've talked about. It's just because of huge companies that are located in Ireland. If you compare, say, Ireland with the United Kingdom, it's quite funny, right? So Ireland is double the United Kingdom, but that's not really true. That if you think about GDP capita as sort of the general level of well-being in a country, though I am part Irish and I love the Irish, GDP can be misleading. But I don't think it's misleading here at all for Russia. Russia's it could have just been a really wonderful, peaceful nation. And they choose not to, so. Yes, sir. I guess there's a lot of Bitcoin people that have moved there. I like to watch tennis. A lot of tennis players are there. And, if there's any Hungarians, point it out to me. But, Hungary is a pretty big country, pretty rich history. They're on the same pace as Latvia, I would say. Hungary should be doing much better. All right, they've had Orban since here, 2010. Greenland. GDP can be misleading. That's bigger than the UK, and I'd probably say that the power of Greenland would not necessarily reflect that, but. Anyway, the point is, how can it be that all of these European countries can't rally together and stop this one country from attacking its neighbor? It's incredible there to see Ukraine. So, I don't know. I continue to see these strange tweets. Kasparov is a really, he's really, he's hardcore. He's never going to mince words, but this guy ran for president against Putin after he had a legendary chess career. He ran for president of Russia, and it was sabotage all the way down. I mean, you can read. I would recommend reading his 2014 book, "Winter is Coming." All right, 2014. I've said it many times. If you really want to understand, if you want to go 0 to 60 on really what's happening in this part of the world, I think he can give you the best explanation. And he was against, he's been against the odds of Russia his whole life because he's Armenian. Russia's a pretty xenophobic place. So Karpov is the other chess master that he was playing after Bobby Fischer, left the chess scene sort of weirdly in the, late 70s, early 80s. It was basically Kasparov and Karpov, so it wasn't really televised or no one really cared about it in the West because it was two Soviet Union players. But he's talked about it many times. I mean, he was against it. Like the Soviet Union themselves didn't want Kasparov to win, and he just faced a lot of challenges, but he persevered, and he's one of the best players ever. So, and then he's super smart. I think he knows what's going on with Putin, and he knows the proper way to stand up to a bully. So. There's not too many channels online which can swing from Bitcoin to global politics and macro, is there? Or at least such a focus on Russia and Ukraine. That's about all I have for today, guys. If anybody wants to see another chart, let me know. Again, I know, I keep getting asked this question. Like, I know I have such a basic, only one chart at the moment here, and it's not what you see normally on my videos. It's just, it's much more basic. It's explanatory, tables and stuff, but it's not possible to host this type of a chart online because I'm working, like, I set these things up. Some of it is automated, of course, but I'm tweaking things every day. Sometimes things don't update. Like, it's just, at least for my skill set, I don't have it up and running where I can just, you can have charts like these where you can select and look at all these different charts. I just don't, I can't set it up yet, or I don't know, maybe ever. So it's just easier for me to record. It's so much easier for me to just record and talk about it. $10,000 to $30,000 a day. I think that's a good thing to look out for by the end of the year. $10,000 to $30,000 price changes. Then we know that we're in pretty rare territory. So when you get above this, what the trend line would do in 3 months, Bitcoin does in a day, that's when we know it's getting crazy. Thanks, Roman. one more thing just to close it out. I know I sometimes this might get confused as well, but this uh, this trailing 12-month figure, which is the trend, which is, we'll take off this, right? Not the crazy stuff. We started the video out talking about this stuff, right? We're probably going to get another crazy peak here, 400 or 500% year on year Bitcoin price by the end of the year, I think. But if you smooth it out and you look at how the trailing 12-month return of this solid black line looks, right? It will give you the dotted black line. This doesn't hit 10% until 2070, okay? Not until 2070. So we still have 45 years of that. 45 years of a simple, and this is not going down, like I said, because this is going to go higher. The black line is going to go higher. The solid black line is going to go higher now that we're going to pull this up. So it's not like you shouldn't have confidence in these lines. Remember, since 2016, it's been doing the same. So it's from 27. It's until 2070 where we're going to be above today's stock market gains or bond market gains, roughly 10%, right? Just very round numbers. But if you look at this chart, which is my preferred chart to really analyze like how you've done in Bitcoin, like pick anywhere here. Like if you bought in 2014 or say you bought the top in 2017, all right, that's still a 60% return if you held those coins that you bought in 2017 until today. It's a 60% return. And then where we are right now, the run rate of the trend line is between 42 and 45%. It's going to get down to 42% by the end of the year. This will go out over 100 years to get down to 10%. So it's true, unlike a real estate investment or a stock investment, when you think about, or any investment, those are all exponential assets. You think in terms of constant growth. So you say, I want 15% a year. I want 10% a year as what you demand. That's a compound, annualized. This would be a straight line. This would be a straight line in that case. Okay, that's exponential growth. Bitcoin doesn't go exponential. So it is weird. And you might be thinking, oh, that's not exciting, or that can't be, that our expected returns drop if I hold Bitcoin. Because again, what is this saying? This is saying if I bought Bitcoin today at the power trend price, not the actual price, but the power trend price of 102,000, and then I held, my returns, my expected return actually falls. Just like if you bought here. So I know it confused people here. If you bought here and held until today, you would get 71% per year. Okay. Likewise, if you bought here and held out to here, it sort of switches. Now you have to go this way. So everything is from today in this chart. So say we go out to 2031 and look back at our return of where we bought from today, that's a 35% return. So you can see that it will fall. But in this case, if you're worried about, this falling compared to other investments, this line does not hit 10% until over 100 years from now. Okay, so not just until 2070, which is the simple trailing 12-month return, but this is like the compounded, strong, hodl Bitcoin. It's going to take 100 years. And obviously, no one knows what's going to happen in 100 years, but philosophically, Bitcoin will well be adopted, as I've said, probably within 15 years. So it's not going to matter. None of that's going to matter. But the point is we're well above stock market gains. And even though this expected return will fall based on this gradual lowering of this price trend on a trailing 12-month basis, the expected return will also lower, but it's very slow. And even if you bought Bitcoin today, sold it in 2030, that's still a 35% per year expected return. So it's enormous. It's enormous. And in dollar terms, that's going to, seem crazy. So I'll probably keep explaining this one. I know it's hard sometimes between this one, the simple trailing 12-month, and this one, the compound growth. But that's this is the best way I know how to sort of show the various ways of analyzing Bitcoin's performance. And bottom line is, it's way better than anything else in the market. Although it's true, it's never going to be as good as it used to be back in 10 years ago, in my opinion, based on the trend line. All right, guys, I'll leave it there. Have a good Wednesday. Talk to you tomorrow.